You spend all your time trying to earn money. But the problem is, when you actually start paying taxes, you have no idea how to save it. This video is for anyone who's already in the tax bracket, has just entered, and people who are not in the tax bracket. Don't think just because you're not in the tax bracket, you won't pay any taxes. So let's begin. Let's start with the first way, that is new regime hacks. Bhai dekho, if you look at this table, it has some tax slabs over here. But everyone is saying up till 12 lakh rupees, there is no tax. So if there's no tax till 12 lakh rupees, what is this 5% and what is this? Let me explain. So there are three things you need to understand. Standard deduction, the slab system, and rebate. It's very simple. Thodi ye words complicated hai. First, let's start with the standard deduction. So let's suppose someone's gross salary or their salary is 12,75,000 rupees. As the name suggests, it's standard, as in it's applied to everyone, and deduction, as in it's reduced from your salary. So this amount is 75,000 rupees. Therefore, if your salary is 12,75,000, the deduction is 75,000, the taxable income is 12 lakh rupees. Next, let's understand the slab system. The slab system is a little different. It works like buckets, and each bucket can be filled only a certain amount, and you're taxed only for that bucket, and then it overflows water to the next bucket. Now let's suppose I earn 12 lakh rupees. The slabs or the buckets look like this. Bucket number 1 is 0%. Bucket number 2 is 5%. And bucket number 3 is 10%. What are these? These are more buckets. बाद में देखेंगे. First look at these buckets / slabs. Each bucket has an amount of water that can be filled maximally. Maximally is not a word. 4 lakh rupees for this. Another 4 lakh rupees for this. 4 lakh rupees for this. So notice that for the first 4 lakh rupees, I will be charged 0% as tax. For the second 4 lakh rupees, in the second bucket, I'll be charged 5%. So 5% of 4 lakhs is... Then we have 10% of 4 lakhs, which is 40,000. So 20,000 plus 40,000. सब लोग बोलो कितना हुआ? 60,000. 60,000 is the tax you pay. This is not a celebration. Like I said before, 12 lakh tak there is no tax. How did we suddenly calculate 60,000 rupees? That brings us to the third part. Let's understand rebate. The government basically says, according to this section of the income tax law, that if you're earning 12 lakh rupees, that is, if that is your taxable income, then this entire amount of 60,000 rupees will be rebated or waived off, so you will end up paying 0 rupees. We have two different ways the system works. We have the new regime and the old regime. A lot of people are confused, kaun sa behtar hai, kaun sa nahi hai. Very simply put, the new regime and the old regime have a difference of slabs and a few more other nuances, but all of us are by default in the new regime. And if you want us to create a separate episode explaining these two, say old versus new in the comments and we'll create a separate episode. This is a link to a nice calculator that can give you the answer right now if you want to figure out the difference between the two. Cool. Now we've understood how taxes work, how the slab works, rebate and all that. Now let's talk about the real mudde ki baat, which is how do we save taxes under the new regime? Let's start with the NPS. Now with NPS, we need to understand three things. One, how you can actually save tax. Two, in what situations you won't save tax and how the system actually works. And three, where does India stand in all of this against the world? So first, let's start with this. An NPS is very simple. It's a contribution to the National Pension Scheme, which means when you turn 60, you have some source of regular pension with which you can live your life. So basically, like any pension system, you contribute to that system. Let's suppose it's this right here. You contribute to the system during your working years. So you are earning a salary in your active working years and you make a contribution over here. Now this has a lock-in, which I'll explain in a bit and a nuance in a bit. But basically, at the age of 60, you are able to withdraw 60% as an entire amount and the rest is an annuity of 40%. Annuity means whatever 40% is remaining will be paid out to you monthly. You can also choose not to withdraw, and the entire amount can be paid to you monthly after you have hit age 60. Now, there are a few things over here. The first is how do you actually get a tax benefit? So basically, if you make the contribution, there is no tax benefit. If you make an extra contribution, usme bhi there is no tax benefit. However, if the employer makes the contribution from his side, then there is a tax benefit to you. Now, this means that you have to basically talk to your HR to restructure your salary so this can actually happen. Also note, there are two kinds of accounts. There is a tier 1 account and a tier 2 account. These are different types. The first tier 1 account is the main retirement account. This is the account people are usually talking about, which has the tax benefit. The second tier account is a savings account equivalent, jahan pe there are no tax benefits. Now, how much tax do you actually save? Let's say you earn this much, and after removing your standard deduction and employer NPS, your taxable income reduces and overall tax also reduces. And I wanted to tell you something really interesting about India. Imagine 100 people in our country. 12 to 13 people have access to a retirement fund. Now imagine this as a nation when India's median age, which is roughly in its 20s right now, becomes 50s and 60s. What will our aging population actually have access to? How will our nation change? Ye thoda crazy hai, because if you look at a developed nation, the pension coverage there is 80+%. In case you don't like the NPS, that's fine, that's your choice. But find another way so you have some source of corpus or income or some pension. And apart from the NPS, you have this list over here. It's called the allowances list. So if any of this is applicable to you, talk to your HR, gather the correct proofs, and you'll be able to deduct these from your salary as well. Dekho, new regime mein, there are not many ways you can actually save tax. Like, that's the point of the new regime. They've simplified it by changing the slabs, giving you more leeway, but tareeke kam hai. But there are still some ways you can do stuff, and I want to tell you those ways. Let's start. First is home loan interest. This clip, please show to your mata pita, because I am gonna send this to mom and dad because just they don't believe me. I'm sure your parents have said this. Beta, you're paying so much of rent, itne mein to you can own a home and you'll save tax also. This, for a self-occupied property, no longer exists. However, if you buy a home and then you decide that you want to rent it out, the income that you get from that, there is a tax benefit. So let me explain. Let's suppose you buy this home and you rent it out to this person over here. Let's suppose you're earning 35,000 rupees in rent. So that's about 3.6 lakh rupees a year. I'll remove the municipal tax, so we are at 3.5 lakh rupees. You are allowed to deduct 30% straight from rental income. Then you find out how much interest you are paying on owning that home. So in this case, it's 2 lakh rupees. Your net rental income that you show to the government is 45,000 rupees, and you pay tax only on this. Next, we have the LTCG rule. Now, all of us know what LTCG is. Basically, long-term capital gains. If you've invested some amount in equity markets for more than 12 months and you exit, you are charged a tax of 12.5%. However, there is an exemption. If your gain is 1.25 lakh rupees, you pay zero tax. Now, if you have some big expense happening over the next few years and you slowly want to exit equity, a good idea is to plan that exit because you know of this exemption. Then we have LTCG gains invested in a house. Let me explain how this works. So if you have a residential property and then you sell that residential property, hopefully for a lot of money, so you take that amount and you buy another piece of residential property, you will pay zero tax. The second case is you have equity and then you sell that equity, it's over 12 months, so hopefully you've built it over 5, 10, 15, 20 years, and you have this big corpus. With that corpus, if you buy a residential property, your first one, then again, you pay no tax on this. The third case is you sell an immovable property and you take those net of those proceeds, within 6 months, you buy government bonds. Again, you pay 0 tax on this. So another way you can save on taxes is by managing your short-term capital gains. For example, selling your stocks within 11 months versus selling them after 13 months. Now, this will have an impact on your taxes due to the holding period. And this is true for any other asset as well. But the holding period and the tax treatment obviously changes. Let's do an example. An STCG on property. Let's suppose you buy a piece of property and sell it within 24 months. Let's say the 12th month. So the sale price is 42 lakhs. Purchase was 30 lakhs. This is a short-term capital gain of 12 lakh rupees. And if Vikram is in the 30% bracket, he will pay all of this in tax. However, if he had sold this property after holding on to it for 24 months or more, then he would have paid 12.5%. It would have been categorized as a long-term capital gains. All of these things exist. Most people don't know about it. If you can do a little bit of planning before you do sale and purchase of any asset, you can save a lot of money. And then we have a surprise on tax on gifts. Now, if you look at this over here, you'll see that some things are taxable and some things are not. And the word is relative. If your relative gives you money, then in some cases you do not pay any tax on it. However, the government's definition of relative is different from what you and I say. So our cousins, chacha, tao, they're not relative in this context. Only immediate family members are considered relative, and that becomes tax-free. Now, this is the most important bit of the entire video. So there are 3 things that you need to know. The first is, can I avoid taxes? No. There is no way you can actually do this. Peace of mind is more important. The IT department is very smart. They will figure it out, if not now, later. Next, for people who do not have a tax liability, please file the return and say nil. Because if you do not actually file this, you will have problems in visa applications or loan applications. Another thing is, the government gives you tax benefits because it wants good behavior from you. So insurance, ELSS, etc. They want their citizens to do certain things. NPS, ki acha pension hona chahiye. So they incentivize you by taking these right actions, and they say, chalo tax kam de dena. Now sometimes these rules change and they say, okay, now insurance, we will not help you save tax. But that doesn't mean that you should stop. The reason to do ELSS and all these things is to have a better future. So even if you don't save tax on some of these instruments because rules changed, think a little bit. Don't take all decisions just because you want to save tax. So this was a very hard video to make for all of us because we all want to save tax. I also want to save tax. It's so difficult and so complicated sometimes. If you thought that this video was helpful and you genuinely learned something, because हमको बहुत effort लगा, please say something nice in the comments, because tax तो किसी को पसंद नहीं. But there is a lot of misinformation out there on the internet as well. So we thought we'll make one video with all the legal correct ways you can actually save tax, and that's what you'll see today.